Okay, 3-3, this is something great about chapter 3 is it's the same stuff, we're just doing different transactions. And that's really it. So in 3-3, we paid cash for rent. So again, look at your transactions and see if you can break them up to figure out what account you're using. So this one, we paid cash. So automatically, I know cash is going to go in my credit. So if this helps, use it. If not, just ignore it. So this happened on the 12th, and I know that I paid with cash. So I'm going to say, okay, I already know that. I'll just put that in my credit slot. But then what did I pay on? And I paid on rent. But this is going to be called rent expense because it's just the operations of running our business, and so they go into expenses. So I do C4 and for $650. Okay, 13th, I received cash. So right there, if I received cash, I know it's going to go on that first line. So cash, I received it from a T13 for $2,500. And why did I receive cash? I either sold services or I received it from sales. Sales and services are the same. So don't let those confuse you. So for $2,500. 14th, I received sales. I sold services on an account from K Spa. So we put in the date, and I have an accounts receivable, meaning I'm going to be paid at a different time, but hopefully I do get paid. And I use this with a sales invoice number 1 for $480. And sales is credited. For the most part, sales will always be credited until we hit like chapter 8 and we close them out. So just know if it's anything to do with sales, sales will always be credited until chapter 8 and when we do something different. 19, we paid cash for an electric bill. Now remember, if it's electric, gas, or telephone, those all go into what's clumped as a utilities expense. So we're going to, I paid with cash. So if I already know that, I'm going to credit my cash. And I'm going to put utilities expense. C5 for 22.0. There we go. Okay, the next one is we received cash on an account. So automatically on the 20th, I know that I received cash. So anytime you receive cash, it's going to go on that first line. So R2 for $255. And she paid down on her loan. There we go. And then the last transaction happened on the 21st. And this time the owner paid cash to the owner for a withdrawal. So that money is going out of the business. So I already know that cash is going out. So it's going to go on that second line. And Norma Dirks, and we call these a withdrawal, so in short we call them a drawing, and they're going to come out of what's called the drawing account. And this is just when the owner takes either money or something out of the company, because they're the owner, they can do that. So again, same principles as in 3.1 and 3.2, just different transactions. Let me know if you need help.